Hi, welcome to mywealth.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled Interest Rate Hike Shocker. Okay, well, it seems like everybody in this broker today seems to know where this economy's going and what's going to happen. Okay, the Fed's going to continue to print money, rates are going to stay low, the dollar's going to continue to tank, and stocks and commodities will continue to rise, and somehow the federal government's going to be able to keep inflation in check. Does this sound about right to you? Okay, on Monday, what was previously the unthinkable happened. Okay, GM was allowed to go into bankruptcy. And what happened? The Dow responded by being up 220 points. Okay, the market was sending a clear message to the Obama administration. Okay, that not only does capitalism work, but that perhaps the economy is resilient enough to handle some of the other truths that are out there. Okay, and what are some of these other truths? How about the one about the U.S. being completely broke? Or here's another truth for you. How about the fact that the Chinese they don't want to lend to us, okay, unless they're going to be compensated for the additional risks they're taking on, okay, regardless of whether or not the U.S. gets downgraded by S&P. Okay, well, the president made a great show of his big date night here last week in New York City. He actually went to one of our favorite restaurants. Okay, Secretary Geithner was sent to China, okay, to do the dirty work. Okay, basically he had to go and allay the Chinese fears about what's going on with our economy. Okay, so what do you think happened during this meeting? Okay, Geithner himself said that we are going to try and reduce our deficits. Okay, but I wonder if they asked him how he intended to do that. Because unless the government can tax itself, there's not going to be anybody left to tax. Okay, it's right now, private investment is very leery of getting in bed, so to speak, with the U.S. government through the stimulus funds that are going to put forth and come forward. Okay, so what should they do? Well, they should probably cut spending, but right now it doesn't look like they have any intention of doing that. Okay, so now enter the bond vigilantes. Okay, yields are rising fast as creditors are starting to realize that trying to spend our way out of this recession might not be the greatest idea. Okay, I suppose that the plan could work if we actually had the cash to do so. All right, but to print money recklessly and just hand out IOUs is becoming downright laughable. Okay, it's like borrowing money from a friend and then going straight to a casino. Okay, so how's this dangerous game of economic chicken going to come to an end? Well, the one thing we have learned about this administration is that they will always do what is most popular. Okay, but how popular are they going to seem when gasoline prices go back to $4, or you're paying $5 for milk, or some other inflated commodity price? Okay, and it's going to look doubly as bad when the hedge funds and the investment class makes a ton of money on rising commodity prices and stocks, while the little guy gets hosed again. Okay, where's the change in that?
As always, be sure to check out the written blog at www.mywealth.com/blog. Okay, so let's talk about some of the changes that this administration promised and some of the biggest economic problems that we faced under the prior president, President George W. Bush's regime. Okay, the first problem was a housing market on steroids. Okay, a lot of people were encouraged to buy homes that actually should never have been encouraged to do so in the first place. Okay, what we're seeing now is record foreclosures going on because housing prices got so out of hand, and people aren't able to afford to make their payments. They bought too much house, and now we're seeing massive housing deflation. Okay, so the second problem we're looking at were ridiculously low interest rates for far too long. Okay, much has been made about this recently. Started with Greenspan and it continued along Bernanke, but basically they kept interest rates very low. Okay, what that did is it caused the U.S. dollar to go down, and that caused commodities and stocks to go up, sort of like the inflation trade and the correlation trade that we talk about. Okay, so one of the problems under President Bush was gross inflation. Now I know the numbers come out, every month, and they say, oh no, there's no inflation going on, everything's okay. But every time you pull up to the gas pump and you see $4 gas, or you go to get milk and it's $5, or something else has gone up, you can really see where the inflation takes place. All right, it's obvious that it occurred in the housing market, but as a consumer, you know when inflation's going on, and you don't need the government to tell you that. Okay, and lastly, problem was large budget deficits. All right, much has been made of how much we've borrowed and how much we've spent, and all these deficits that we had problems with. Okay, one of the problems that we have now is that these deficits are being increased, by 3 to 4 times. So, we've really gotten out of hand with the spending and the borrowing, and we're going to see how this all plays out. So don't wait. Get educated. Go to www.mywealth.com. Check out our currency course or our investing course, and learn about how these relationships can affect your finances going forward.
Now, for the administration of the guy who ran on the platform, "Hey, I'm not George Bush," guess what? If it looks like a duck and it quacks like a duck, well, you get the idea. Okay, let's face it. Everyone has figured out the correlation trade. If you're not familiar with the correlation trade, basically, commodity prices go up as the U.S. keeps interest rates low and the dollar goes down because commodities are denominated in U.S. dollars. Okay, right now, oil is already at $68 a barrel, and we haven't even seen the effects of the stimulus program come into play yet, so they haven't even been realized yet. Okay, so how should this administration differentiate itself from the prior regime that they have so tactfully blamed for all of our economic woes? Okay, with the one action that can reverse these problems, even though it may be a bit painful or unpopular. Okay, by raising interest rates. Okay, if they raise interest rates, commodities will sell off, money will flow back to the U.S. dollar, and our creditors will be more likely to lend us money now that they are being compensated for taking on additional risk. Okay, who's going to get hurt in this scenario? Okay, responsible homeowners and the Chinese. But you know what? Guess what? Who cares? They didn't vote for Obama anyway. Okay, and this could happen sooner than you think. So don't wait. Come to www.mywealth.com and check out our currency course and our investment course to see how a change like this could affect your investments and your economic future. Okay, so I'm Mike Conlon. Thanks for being with me, and I hope to see you in the courses.